Hi, folks. It's Aidan Crypto speaking. Welcome to another episode of the Nest Show podcast. It's been a while since we had the latest guest. The market actually hasn't turned up by a lot or hasn't turned down by a lot in the same place, right? Because we kind of like moved sideways. This corresponds with a typical seasonal weakness that we tend to see in the summer. And I could go on and on and on about how important the understanding the cycles, the seasons are. However, there are people who are way smarter than me, and they are in this room because we're talking about Jeffrey Hirsch. Jeff Hirsch is a CEO of Hirsch Holdings, the publisher of Almanac Trader. Stock Traders Almanac is an excellent worksheet and a beautiful guideline that I use personally. This is a full disclosure, kind of recommended. Editor at Stock Traders Almanac as well. And he goes by the quote, "Those who understand market history are bound to profit from it." This is an excellent quote to kick off the interview with the legendary godfather of seasonal studies, Jeff Hirsch. Jeff, how is it going on your end?
Going super, man. How you doing, Adrian? Good to be with you.
Good to have you on the show, man. This is such an excellent opportunity, right? Because for me, it's a little bit of a dream come true, and I really mean it because the first time I looked into your works in the Stock Traders Almanac, it was 2022, right? This was the midterm bear market kind of like setup that, of course, fulfilled itself in its own prophecy, all the way in 100% manner. Right now, we are in an arguably even better, one of the best, if not the best, setup that you could get for the pre-election years, and it all kind of like is just a mere piece of the findings that you and your legendary father had found and wrapped it in some sort of a almanac. So
Well,
if
he
you
started.
if you he started that.
Yeah. I mean, the setup that you're talking about for the 4-year cycle, 22 really set it up. I mean, one of the things that Yale, my late father, had called the midterm year, which is the midterm election year in the States, is the midterm years where bottom pickers find paradise, and we sure got our bottom. There's a lot of skeptics back then in October 22 when I was calling the bear market over, and now they're coming in a little bit late, but the bull market's still rolling for stocks. But yeah, so Dad, we lost him a couple of years ago, November 21, just after his 98th birthday,
Wow.
which we celebrated with him. He had a sweet tooth, the old guy, so we brought him some fancy French desserts, me and my wife and my sons, his grandson. So we had the generations together. But back in the 60s, before I was born, back in Nam, as we joke, my generation does. But Dad was working for this outfit called Indicator Digest, and it was a publication started by my cousin, his first cousin, Sam Coslow, who my oldest son is named after, Samson Coslow. And Sam was a songwriter and a movie producer, and had gotten burned in the market because he sold his publishing company to like RCA for stock, way back in the old crash. And he became a student in the market, and he ran an ad in Barron's. Barron's still exists. They used to do these A/B splits. They'd run two different headlines on two different printing presses, and they would, old school test marketing, not like you do on social, but and the ad hit. So we called my father, his cousin, who was working in the music business, and said, "Yale, I need you to run operations." And he became like COO, publisher, operator, and also, analyst and researcher at Indicator Digest, which ended up being a proving grounds for newsletter writers, editors, stock analysts. I mean, you're a technical analyst, you're a CMT, Justin Mammis. I don't know if you remember hearing about, when to sell. I've got some of the books back over here, but he went through Indicator Digest. But so after a few years, this was 61. After a few years, Yale, my father, had this epiphany to take all of the market's indicators, patterns, cycles, trends, and put them together in a calendar format so that he could follow the market schedule along with his own. And you have the book. And, it hasn't changed a whole lot. We've improved. We've built on it. I think cycles have changed. Seasonality has shifted with, the advent of different things. We can talk about some of those discoveries. But, he incorporated in 1966, just before I was born. So I was basically born, bred, weaned, raised on market patterns, cycles, trends, behavioral finance, and it hit. And the big thing was that back then the brokers and the advisors loved giving it to clients as gifts. It works for individual investors, traders, fund managers. Whether there's some day trading stuff in there as well. So we're proud to always say that it's been on the desks of top money managers for decades. And also, novices, people coming into the market, it gives you a flavor and a feel for what makes the market tick. And of course, there's the inspirational quotes that I curate now and all the different seasonal patterns, sectors, the quarterly analysis, intraday, holiday trading patterns, that each month's got its own personality, which I know you've picked up on. So after, sort of fighting him for years and wanting to do your own thing, you want to make your own mark. One of my friends said, Jeff, what are you doing? Go work for your father. So I have this little ruler here that I still use, that I used to go down the Barron's Lab pages with a red pen and underline up half-hour ticks and up days and enter them with an adding machine and graph paper back in the 80s and 90s. And then I converted it all when I started working for him in 1990. I converted it all to Excel for DOS, again, back in NOM, as we say, sort of, and then Windows. And now we have a piece of software that, we can query and does all that stuff. So it's amazing. It's been around for 57 years, and it's still, the new one's coming out any day now, should be hitting the warehouse. And of course, I will have to ship you a copy over to Poland, unless we get to rendezvous somewhere. But we're looking forward to it. It's a slightly new look on the cover, but this is the election year edition. So, we could talk 4-year cycle at some point if you wanted to. But so that's the story. And, we run the newsletter that capitalizes on all the cycles, seasonalities. We overlay with fundamentals and technical analysis and sentiment, market trends, and the economy, and that's how we construct our portfolios.
Oh man, I'm getting a little nostalgic, right? I know how that sounds because I'm a young prick, right? Basically 30, turning 30, by the way, in a week from or so. So we should celebrate.
But you're not even 30 yet?
I'm not even 30, man. I know, right? I mean, there was this funny piece, right? Because some time ago, I think it was in August, I got listed under the Portuguese kind of like Forbes 30 under 30, whatever that would mean, right? And people, like most of the comments that I got on Twitter, of course I was happy and it's awesome. Like all the 90% of the questions were, how on earth are you still under 30? And when I read the 50th comment like that, I started figuring out, what the hell? How on earth am I not 30 just yet, right? And that, when I kind of like, again, just speak it out loud, it seems strange to me, right? Because there is so much busyness going on. There is so much, I think, such a big honor and opportunity to meet people like yourself, Jeff, right? Because we had such an excellent time in New York at this 50th anniversary symposium of the CMT, which was a very, also another kind of like a bucket list thing for me, right? All the CMTs, Charter Market Ignition Association, definitely is way underappreciated. The whole technical skill, the whole technical kind of like workbook, the whole technical toolkit, the whole I'd say the whole arsenal that comes with it, right? We're talking about the cycle analysis, we're talking about the seasonal analysis. Somehow all of it kind of like embedding the nature of the markets, right? And that helps us quantify that. And the main question I get from the people, right? The main prejudice that people would show off always is, why would I look in the past if it doesn't tell me the future, right? Why the hell, like, why the past is so important to have a glimpse of a thought, to kind of like just basically have a look back there when it's in front that you should focus.
I mean,
so what do you say to those people?
That's the basis of human development. I mean, the reason why we rule the planet over the other beasts is because we're able to look to the past through the present to project the future. How are you going to know where things are going to be if you don't know where they're going? I mean, the same thing with forecasting the weather or anything else. You can't make a forecast based upon nothing. So there's a quote from Patrick Henry, one of the founding fathers of America, that, I know of no way to look at the future but by drawing a line from the past through the present. So there's that concept, and then there's what we know about behavior. People are, creatures of habit, and societies are creatures of habit. The institutions that drive the money, the big chunks, are creatures of habit. They have quarterly, behaviors that they do. We see that in the Almanac. We see that in the studies that we've done. We're seeing it in Bitcoin, and I'm just going to touch on that for a second because I discussed it with some of our other technical analysis friends and people, proponents of crypto and Bitcoin, and others think it's like a hedge, like gold or something. But you look at the correlation to the stock market and to NASDAQ, it's really tracking, with maybe a lot more beta or deviation, but it's really tracking the same seasonal behaviors, the same repetitive movements of people. So before I get into some of the proof, the planet Earth, most of the land mass and most of the people live in the northern hemisphere. There's very little on the bottom. You got Antarctica, some cool parts of Argentina and stuff, but for the most part, in Australia. I'm a big rugby fan, so you got the Southern Tours, down there. Some of my favorite rugby teams to watch, but World Cup's on right now, by the way. But basically, you've got, money and people behaving in a certain way around the cycle of the sun. So, in the summer, people do different things. There's more light. They go outside. There's vacations. There's, Europe used to take off from July and August. That's changed a bit. I remember I used to travel. You'd see these people are away for a month. Like, how do you do that? But in the States, you've got this sort of, Memorial Day, which is the end of May, to Labor Day, which is the beginning of September, sort of this vacation time. You see it in the volume. We have a page in the Almanac about the summer doldrums where volume dies down. So you've got people focusing away from the market during the summer. Volume dries up, it goes quiet, goes sideways. Then they come back for the business cycle. And this is where the old quote, everybody, I assume, not everybody, but I'll presume a lot of people know about sell in May and go away. You know that the saying. You know where it comes from? It's an old British saying. It's an old sell in May and go away, come on back on St. Leger's Day. St. Leger's Day was the final leg of the British Triple Crown horse racing, thoroughbred horse racing, where people would come back from, to the London season after this race in mid-September.
So hang on. So sell in May, go away comes from UK. It's not from
British
US
song.
or something.
Yeah.
What the hell?
Coming back on St. Leger's Day. So you ever watch Downton Abbey or any of those sort of British shows that have the London season and then they go up to the country? Because London was built on a swamp. They finally put air conditioning in like last year there. You can get an ice cube in London now. But
Jesus.
I was there a bunch of years.
All the thumbs down. I gotta come from UK right now.
No, I love London, but it used to get really hot and messy and steamy in the old days, and so the aristocracy, the merchant class would all go up to the country for their fox hunts and all their stuff, and business would slow down in the summer. Same thing continues to happen here, and we see these behaviors repeating year in and year out. So why pay attention to seasonality? Why pay attention to cycles and patterns? Because they've been proven to work. We've seen the market track them. But we've seen the current market cycle track the seasonal cycles and the 4-year election cycle very closely right now. Admittedly, it doesn't always work as closely, but it does work. And it's not something people think seasonality. Oh, you just buy. Buy in October. My line is buy in October and get your portfolio sober. Or sell in May and go away. We don't go away. You reposition. This is the time where the market tends to peak out and go sideways. I could show you one of my charts that sort of represents this thing. If you want to put that up, I think we had it queued up. Yeah, this is the 1-year seasonal pattern of the Dow. I know the Dow gets some flack for being old boys or a boomer index, if you'll allow me
Boomer
But
index.
it still represents the market. It's still got the 30 biggest companies in the world on there. And you can see, I don't know if my mouse is working on there, but let me see if I can get that up and point to it. You can see the
Cannot see the arrow though.
there
Cannot
it
see the
is. How's
pointer.
that?
Oh, there you go.
Oh, look at that. I'm working. So
With a touch of a magic wand, it appeared.
so the black line is the Dow since 1950. Okay. And you can see that the market pretty much goes up from the end of October through April, and then it goes flat through May. And it doesn't, but it's choppy. It doesn't necessarily drop like a stone. And then the green line is since the 87 crash. It's 88 to 22, which is when they put the collars and circuit breakers, and they sort of changed the market systemically where it couldn't just free fall for no reason. And then the red line is the old method. It used to be buy in May back in, this is 1901 to 1949. It used to be an agrarian economy driven by farming where, in the spring, you'd have people, investing money, buying seed and fuel and fertilizer and hiring people and borrowing money. And then when the harvest time came, they'd have to pay their loans and sell their crops. So you see that sort of inverse. So people that go back, prior to 1950 or World War II and try to talk about, the best 6 months didn't work or the sell in May is whatever, is false. I mean, you can see it right here. And then if we go to this next chart, this is right out of the 24 Almanac, which I said is going to be out in a couple of months. And this is similar to the chart that we did for our Bitcoin study.
So that's an exclusive share. First time ever the word sees it. Is that right?
The first time ever our collaboration. Yeah, I mean, I've never. This is the first ever Almanac study of crypto, but this is just the SP to show you, and we'll share the other one in a moment. But this is where Yale had the epiphany back in 1986. My father came up with this best 6 month switching strategy, which by looking at this chart, you can see that these weak months, May through September, October's gotten better. It's a turnaround month. It's coming up on the calendar very shortly, so be prepared for that. But you see November, December, January through April, very strong. February is that weak month, that midwinter weakness, sort of the weak link in the best 6 months. But this is sort of where he had this idea to put together the best 6 month switching strategy. And then here's some of the proof. We had technical analyst extraordinaire David Aronson put out a book back in 2008 called Evidence-Based Technical Analysis. He tested through the scientific method. I think you'll understand that, disproving the null hypothesis. I think your credentials allow you to understand that implicitly.
I still have nightmares. With it.
So he took 6,000 different plus, I think 6,200 different black box systems, put it through their paces, and found that none of them had predictive power. They were all a result of chance. And so when we, put this book, we recommended this book as our best investment book of the year in 2008. We asked him to put the best 6 months through the same paces. And he did it starting in 87. And unlike any of the other 6,000 plus, he found the best 6 months, buying the last trading day of October, selling the last trading day of April, and flipping it the other way was totally had predictive power, not the result of chance. And here's the average performance of the Dow going back to 1950. You see 7.3% in the best months, 0.8 in the worst. You do a hypothetical compounding of 10 grand in the best. You get $1 million profit, $1 million gain, 3,400 gain in the other one. Now, overlaying MACD, moving average, convergence, divergence, we use an 817.9 on the buy side. The shorter, faster MACD gets you into those bottoms, which are more of an event. 1226.9 on the crossover on the sell side. I know this is a lot of technical information, but we can look into it later. But anyway, using the MACD timing indicator increases the results. 8.9% in the best months, -5 in the worst, -0.5, and that almost triples the results of that hypothetical 10,000 investment to 3 million, and it makes the little gain a loss. So
Wow.
it's kind of the proof is in the pudding there. Well, there's a couple of the buy signals if you want to look at the MACD, but I guess our the point being that seasonality works. It works in conjunction with technical analysis, and we're going to be looking for our buy signal starting after October 1st for stocks, and I would say arguably based upon the work we've done, it might just work very well for Bitcoin and related crypto assets and correlated
Mhm.
securities.
True, true. We have again for everybody who's watching that on YouTube. By the way, this might be a perfect opportunity to tease you guys a little bit to go ahead to Jeffrey's Twitter account or /X account right now these days.
X, yeah.
His handle is Almanac Trader, right? And I want you guys to go ahead and give a follow, right? Push a follow button basically on Jeff's account because that, like, as you can clearly see, those are some factual things. Those are not opinions. Those are facts. Those are numbers. Those are figures. Those are literal earnings, literally shown on the screen. And they are not some random, data. They are taken and averaged, like I said, and backed by 57 years of the works of Stock Traders Almanac. That's twice as long as I live again, right? You have to respect that. So just out of the pure respect, go ahead and follow Almanac Trader Jeff Hirsch on X, on Twitter. I don't even know how to call that platform anymore, right? People still
Yeah, I'm confused.
people still anchor to Twitter, so it's interesting on its own. Still, what I would recommend as well is because we of course have the crypto seasonality on the agenda. We're gonna jump there in a couple of moments. Before though, I'm really interested, right? Because the whole strategy, the seasonal strategy, the combination of technicals and the seasonals is exotic, right? Because of
Mhm.
course there are many believers, and that's the problem. There are believers, right? So there are believers in what in that technical analysis works. There are believers who would say, and then some sort of like antagonist, they would say, "Hey, listen, that's bullshit. That's some random walk. There is no way it works over the time," right? They of course refuse all the data. They deny all the data. They just are driven by their own prejudice, right? And pick up whatever fits in their own kind of like agenda, in their own thought process, and fall for this confirmation bias, just basically cherry pick whatever works for them, right? While really refusing all of the data up there. So I've been wondering, Jeff, right? Because
Mhm.
you've mentioned about the best 6 months or the best 8 months, right? Because there are many different variants. Did you find some particular kind of like a group of stocks, for instance, like a special ETF that is your main go-to choice that you would always compound into your portfolio?
Yeah, so I kind of have three different portfolios that we work with. One is this tactical seasonal timing portfolio, which is the broad market. So in the best months, once we get our trigger, and here's just a little chart showing you the sell signal for Nasdaq that we just recently had, and the old buy signal the last couple. So during the best months, I just go into the Dow, the diamond spiders. I call them the spiders and the cubes, and the IWM, DIA, SPY, QQQ, and IWM in the best months. Then we flip that strategy, that portfolio, into bonds or cash. Now that we get actually getting some return with the interest rates being up, you can also write options against those if you like during those seasons. So I'm currently still in the treasury positions, my ETFs like SHV and SGOV, just sort of waiting for that seasonal buy signal, which is arguably coming pretty soon. I think it's setting up quite well. You can see this is from the other day. This is below the line here on the buy. It's setting up for a nice crossover like we had over here. But the next one is sector seasonality, which incorporates some commodity seasonalities like for oil and gold and that sort of thing. So we use the there for the tactical one, you've got seasonality and technical analysis using technical timing indicator. For the sectors, we throw in some fundamentals and some it's just observations of the world. So we have sort of 5 disciplines that we follow: seasonal cycles, recurrent patterns as our foundation, fundamental analysis, technicals. We look at monetary policy and current events, what's going on in the world, as well as sentiment. And in there is market internals like advanced declines and highs and lows. So for the sector side, we have a seasonal sector calendar. It's in the Almanac as well. You could imagine that a lot of them come into play in October. And there's some shorts in there too. So recently we had a couple of shorts hit in the August correction. We got short the semiconductors, the stocks, the transports, and the industrials. They all have a little seasonal, bearish window from August, September to October, November. But we passed on the oil short, like the oil stocks, because of what was going on fundamentally in the market with the production cuts coming out of OPEC and what's going on with the Ukraine and Russia, and basically demand for energy not going down and supply not being increased. So we passed on that. And then when we get into stocks, one of the real alpha that we add is the stock picks. And we're not looking at stocks that everyone else is looking at. We're looking for stocks that big fundamental stock screen for the acceleration of growth in revenue and earnings, undervalued with price to sales and PEs, and then technically sound, minor relative strength, sort of humming along the market, and underfollowed by Wall Street, looking for stocks that are not tracked by a lot of analysts. And that's where we got a stock like Super Microcomputer last fall at I think it was 81.93, ended up being the biggest holding of the Russell 2000. So combination, seasonal, fundamentals, technicals, and looking what's going on in the market in the world.
That's what you call apparently fusion analysis, right? That's what I think one of the very interesting things that I noticed at the CMT symposium earlier this year in New York, right? Because I figured that, well, we love those classifications. Like, as people, we love to be framed somehow. We love to classify ourselves under some specific categories. We just love to be not uncertain, right? Because if you're not classified, then you're feeling all sort of like who I am, what I am, where do I belong, and all this stuff, right? So in order to avoid this existential crisis, you basically have to make yourself subscribe to some category, to some frames, to some framework. And that was one of the biggest discoveries that I figured and understood, that the fusion analysis, again, it's not so much about, first of all, picking your own bastion, like which camp you belong to, right? In terms of the technical analysis, seasonal, the fusion, the fundamental, and all this stuff. Apparently, well, now it a little bit seems obvious that all of it comes in line. All of this works together, right? It doesn't work in some sort of like in isolation, because first of all, what's happening on a free market, it has an impact on what's happening on the other markets as well, right? So there is some intermarket correlation stuff. And because of that, there are those seasonal patterns that just transpire and transmit, right, onto other markets, which is very, very interesting. And we have spoken about the traditional finance for a good bit of time already, Jeff, right? And I would imagine that some people of our audience who love to focus on more of the crypto things, right? This magic internet money, as we like to call that, and people who wear all the funny clothes, they would always go half dressed up, to the in a jacket and in some sort of like funny trousers, to the conferences. They would wear their magic hats, basically like a wizard, right? There are crypto people are specific, right? And I'm somehow trying to be the voice of crypto into the traditional finance, right? Of course, using the CMT credentials, it gives me a little bit of credibility, yes. But what I mean is that there is some sense. The crypto market has been growing so fast and so relentlessly over the past years, right? Over the past 13 years, and more, that it's difficult to just continue to ignore that, right? And
I think the chart that you created for our collaboration, I don't know if you want to jump into that now, but
I will.
The full history chart that you created, I thought was very insightful and really helped me understand the future and the development, the evolution of crypto. So I thought this chart was fantastic. It shows the events where the acceptance, the institutional acceptance, instead of them being biased against it, it gets into it being used, and the whole halving pattern, which is a nice 4-year cycle, almost 4-year cycle, that we discussed. So this just underscores the acceptance of it. I think we're going to find out with the next halving what if Bitcoin and crypto can really stick around, and what happens there and how it changes with that next. That's a big event, I think, and I'm curious to see what happens here, and also how are the seasonal patterns that we discovered together play out this year. So, as we mentioned, I was at a Future Proof, the big RIA, investment advisor conference out in California, and crypto, Bitcoin was everywhere. They were sponsoring, advertising, and then I've seen so many ads for new ETFs, and especially the grayscale one a lot on the traditional finance, TV shows, CNBC, Bloomberg, all that stuff. So it's coming. It's here.
That's right. That's a good way to put it, right? And actually, because not everybody is going to be aware until now. For your information and dear consideration as well, Jeff and I have put together this exquisite piece, one of a kind, unique paper. And this paper is called The Seasonality of Cryptocurrencies Analysis of Recurring Price Trends in Bitcoin. And that's the first ever, as I put it, accredited paper that could serve as a certified frame of reference for all the institutions that we are onboarding right now, right? And just like Jeff basically spits out all the facts, right? We're not talking about the opinions per se. We're talking about the facts. And big money, when they come in, they want to rely on the facts, not so much about like I said yesterday, the bold builder guy, who's perhaps again some random guy on the Twitter and it just runs a Twitter community and whatever. Who on earth would care about something like that, right? They only care about the numbers. So what Jeff and I did is we created the framework with numbers, right? Using this excellent tools that Jeff and his father basically again just collaborated and in a way commemorated, just set it in stone for the history of mankind. The way I look at it, these tools basically find application in Bitcoin, and that's what we put in the article. And this article, by the way, is available for everybody to take it. So I'm gonna share the screen real quick for a second, and everybody can jump to my Twitter account at CryptoBurp. Just make sure that there is again that's the blow take and all this stuff. You have to be careful with scammers, impersonators, etc. And under my pinned tweet, there is the Belief hoodie, of course. You can still get it. What matters more is that this pinned just basically is about the article, and this article is free out for every single person who wants to read it. The only thing is just you need to go and claim it, and it's on the Jeff's website. So this is the link. You just basically click on the link, and it's gonna take you to the website, right? And you're gonna get.
How do I get one of those sweatshirts, man?
What's that?
How do I get one of those sweatshirts?
Hi, I'll get you one. I'll get you one. I'll get you one. I'll
come pick it up from you next summer.
All right, that's it. You're right. So yeah, everybody is again capable of getting their own free copy of our article, right? Of course, it's going to be difficult to go because that's a whole 5-page, study, a very thorough study with numbers, facts, and very interesting observations and conclusions that Jeff and I put together, right? And if you ignore my funny face in the picture, you can actually get the free article and also one lucky follower basically who likes and retweets and reposts and comments this tweet, just like so many people up there did. You can actually win $100 as well, because we want to incentivize people to promote this article, because that's an excellent opportunity, not only for all the institutions that are coming in with trillions of dollars, basically the BlackRock, Vanguard, Valkyrie, all of those people, right? They are here. The Bitcoin ETFs are being filed in daily. Ethereum ETFs are coming in hot as well, right? So it's coming. They are knocking on the doors and they want to buy your Bitcoin cheap. So with this knowledge in this free article, you can basically a little bit outsmart them. Institutions are still people; they make their mistakes. They have their own prejudices. They have their own biases. As it kind of as the study basically tracks those biases. You can easily go read, find it out, learn, and get ahead, way ahead of those institutions. It takes time for them to make a good decision. For you, all it takes is just read this free available article PDF. You can get your free copy under the link. It's on my pinned Twitter post. Go ahead, take it. It's gonna be yours, and I cannot recommend it enough. And um, I think one of the final points is right because you mentioned this institutional chart. So we figured, Jeff and I figured.
I mean, that's what the Almanac was built on too, Adrian. Remember, I
So
mean,
yeah, you want to talk us through a
around
little
for
bit? What do you see?
7 years is because professionals and institutions appreciate it, use it, rely on it, as well as individual traders and investors.
By the way, wasn't there a case? Correct me if I'm wrong. Wasn't there the case that when your pop just figure it out, the one of the first pieces again, I might be mistaken, right? There was some situation that the whole kind of like market started reacting to it and it shifted the way it worked. Is that true?
Yeah, there was a couple of things that we've seen. Like there was the Thanksgiving trade was something that worked. Like the day before Thanksgiving, the day after, we're just up 43 out of 45 years. And the year after he published it, they front ran it, and it just sort of shifted and it changed it. So, you got to be careful of that. And one of the other real institutional and just cycle changing events that I witnessed with him when I was working there was the change of the monthly cash flow, the monthly average performance, which you could show our September chart too, which was kind of along those lines. Here's the data. This is Bitcoin's average cumulative performance. But what we saw with the stocks and the S&P 500 was that it used to be the last day of the month and the first few of the new month was where all the market's gains were made, and the rest of the month kind of nothing happened because that's when people handle all their transactions, pay bills, move money around, rent, all that stuff. And then we noticed around sometime in the mid 90s that there was this mid-month spike that began to appear, and we realized that was because of the monthly or the bi-monthly and every 2-week payroll deductions from all of the pensions and all of the IRAs and all the 401ks going into the market, and the fund managers having to put that money to work. That's what their job is. So that's where you see this sort of influx and the change of the seasonal pattern. So, that was one of the big changes that we witnessed. And, there's plenty of others that I could tell stories for a while, but, I think the constant observation, the watching the shifts of human behavior and how institutions and the collective, market reacts and moves on a regular basis, whether it's Bitcoin or any other asset class, wheat, soybeans, gold, the U.S. equities, whatever it is, they're all moved by the repetitive behaviors of society and individuals.
True, and it transpires to some existing patterns again, proven over the decades, which is fairly interesting. So before we get to wrap the whole segment of the show, Jeff, I'll have two short questions, right? Because you found basically this 1-year pattern just the way you showed for the Dow. You actually figured it out so beautifully, so well done on the Bitcoin for the first time ever. That's the first time ever Jeff has put together a chart like that. And we are talking about the whole market reacting to what Jeff and his father did. So knocking on the doors from those institutions, and they're having this paper, this free article that we have. By the way, I'm going to drop the link in the description for you to get the free copy as well. You can get on Twitter again on my pinned tweet and just win the giveaway as well. So we are talking about those institutions coming in, and just maybe, who knows? Again, we of course cannot know the future, though knowing that out of the lack of reference in the past, when the first works and studies came out, like for the Thanksgiving, right? The whole market shifted. So who knows? Just maybe there is a chance so that you getting to know this paper will be ahead of the institutions, and you'll be basically not only getting all the assistance and all the help and setup for the year and for the trading to get ahead of all those institutions and basically help you navigate for the bull market. You're literally gonna be part of history in the making, right? So if you were to kind of like talk through this chart, Jeff, for a minute or two, what was the most interesting thing that you noticed, and what does this yellow field mean?
And that it tracks the stock market so closely that it's really Nasdaq. It's Nasdaq's best 8 months and worst 8 months. I mean, it's just uncanny how close it tracks the stock market, even after all the ups and downs and huge moves. I mean, just be careful looking at this chart. I mean, the two old lines, the all year line, the black line, and the blue line, 2011 through 17, is on the left scale, which is some massive percentage move numbers there. And even the right scale is pretty big. I know it's exciting for crypto Bitcoin speculators, but I think the fact that the different time frames that we selected here, that I selected 2018 to 22 versus all years, and the 11 through 17, they all track the same pattern. And here it is, 23, in the orange line, just tracking along with it. I mean, especially this recent, I don't know if you can just sort of that top down arrow is really tracking all of the. I don't know if you want to point your mouse on that. I'm trying to, but I don't have control over it. Just how close it's this and this. We released this piece right now. We timed this because of that low point in September that we found, and it's just the amazing part is that it's really true to form right now this year. So it's a pretty good setup, which you'll have to read about in the piece.
True, and with all the time spent through the charts, through the history, through all the background, through all of those markets shifting at whatever Jeff said, I do not have much anything else left to add, basically, than taking the one final golden tip, the one final takeaway that you could perhaps like to leave our listeners and viewers with. What would that be?
Remember to buy Bitcoin in September.
Remember to buy in September. That's, ladies and gentlemen, one of the main conclusions from our article that Jeff and I put together. And I cannot emphasize how honored I've been to work with Jeff on that. And this is an excellent breaking point, again, not only for trading, not only for traders. This is a breaking point for all of those, for the whole industry. The crypto is changing. The crypto is getting a little bit more mature over the time. The big money are knocking on the door, and if we get our hands on this paper, on this free article PDF that Jeff and I put together, you're all invited to do it, and just maybe it's going to help you facilitate your trades better, with better accuracy, and set yourself up for the actual bull market rallies that are coming in. The Q4 is setting up to be very powerful, and we are just getting started. Bitcoin never came back to the halving prices, and it always rallied hard after halving. The next halving is April 2024. And with that statement, closing statement, ladies and gentlemen, I want to congratulate to everybody who's been with us for the last 40 minutes or so, and the most sincere appreciation and words of mad respect to Jeff, and I think commemorating his father as well, the whole legacy. There's been excellent journey for the past 40 minutes listening to such a legend like Jeff talk. Jeff, thank you so much for coming over to the show. That's an honor.
It's been fun. It's been great. Appreciate
it's
you
been
too,
fun.
Man.
That's right. Ladies and gentlemen, that's a wrap. Make sure you hit the subscribe button, smash the notification bells, hit a like, drop a comment, and do not forget to check the video description for the link to the free article. Go ahead and win $100 with the free article on my Twitter pinned account post. And that's going to be everything for today. It's been Adrian Zlunchik talking to you, and let's get the show rolling on the next one. Bye-bye.